guys, Mike here. So, level, what a nice red day. Finally, we get one. And the reason why is because of that good old gap on the S&P, which we will talk about. It was a brick wall. And another thing you saw was important ETFs running right into resistance or major levels. And of course, we did have news come out, which of course causes volatility. Again, the jobless market is getting watched like crazy. Jobless claims came in as expected, but you can see the job market is softening, right? But here's the key. What I want you to do on these charts, and I'll show them to you and keep you updated on this. Those people will show you a chart that only goes back to 2020. We got to start looking now, again, about what is norm. What is normal? What was pre-pandemic normal, okay? So this is the U.S. Federal Reserve Bank of Dallas, their economic index and how the economy is performing. And you can see we're back to norm, right? That's what you saw for 10 years before 2020. You can see 2020 is definitely abnormal, up and down. So we're back there, right? Johnson Red Book Index, right? This is same store sales weekly, year over year. And you can see there's actually two norms. You had one norm from 2010, 2017, or into 2018 actually. And then we jumped 2018, 2019. You see the mess in 2020 right there, up and down. And so we're kind of right where we need to be, right? Still holding in there, right? That's more of a pre-pandemic norm, okay? I know it's shocking, but that's the way it is. Now, here's what's not normal. Look at the home sales. Existing home sales came out, and I mean, there's still a mess. Look at what is actually normal. And you can go, wow, okay, yeah, we are way below normal. And again, I asked you guys yesterday, for those who actually watched, wow, what'd you do with your down payment if you're going to buy a house? And most of you guys said you invested it, right? And so that money's either grown or you lost it, one of the two. But you didn't go spend on a house or sink in the house, okay? And so again, it's all about what is pre-pandemic normal. Are we there? This is not. This has a long way to move back up. Now, looking at this gap right here, boom, hit it to the penny, immediately sold off. As soon as we hit it, I was in there looking at the chart, immediately sold off the rest of the day, okay? That's, we see this all the time with gaps, and I could show you a bunch of them, but, looking at this, here's the resistance. RSP is trying to go for all-time highs, boom, smack down. You go QQEW, major, what used to be an all-time high right here, but you can see many times we got rejected and slapped down. That's what happened today on QQEW. It did hold at a very important position. Amazon, we talked yesterday, filled the gap, boom, sold off today. No surprise there. On a side note for Amazon, remember, it's stuck between the 50 and the 200. You're either going to get a retest of the 50 and get rejected, or we're going to come down and hopefully find support at the 200, but it's in no man's land right now. When you look over at shop, we talked about yesterday, what? Filled the gap. What do we expect? We expect it to sell down, right? Because that's also coincides with the 0.79 Fibonacci level. So no surprise there. And it's had such just a meteoric rise up. Was it 40% or something in a short amount of time? You can see right there. If we do come down, yeah, I mean, bullish wise, you want to hit the 200, but we'll see if we do that or not. Now, looking at SPY, because some people like to talk about the SPY and not S&P. There's the gap right there. We came down and did what? Test this trend line. So they held the trend line for the day for what? Old Jerome Papa Powell, right? That's who's speaking tomorrow at 10 a.m. Jackson Hole. We'll talk about that in just a minute. Now, if it does break, I don't know, maybe he comes out and the market goes, oh my goodness, he's being hawkish, or whatever they do, the crazy stuff they like to pull. They're going to put the market where they want it anyway. And then that gap does come into play. A lot of people got an eye on that. We'll see how it goes. SPX will mark it out too. You can see, again, they're not always completely identical, but you're looking at a gap there down below. Starts like 54.94, something like that. So again, that will be in play if they decide to push this market down overnight, or tomorrow when you start speaking and everything. If we decide to bounce, then guess what? We ain't that far off from all-time highs, okay? And it was a big move down today. It didn't look like a big move because we moved up in the morning to fill the gap, but on like the Qs, it was over 2% drop, okay? That's a big drop in one day. You just don't see it because obviously, we moved up like 0.55% and then moved down like 1.7%, I believe, at one point in time. And so, you got to keep that kind of stuff in mind. But again, we'll mark all this out, be ready to go. That's your two directions, depending on how they want to take what old Jerome says. Now, you put down the bottom, what do you think he's going to say? I think he is going to be dovish, and he's going to start, kind of hinting at rate cuts and stuff like that. Now, IWM, that was another one. Filled a gap yesterday. What happened? Sold off. Where'd it come into? Look at that. Magically, they're all sitting on a trend line. Oh my goodness, I just don't believe that's how the market works. But that's how it is. Again, we've held the 2024 high. That's the key. And if you come down, it's about holding the 2024 high, and that's still another 1.2% down. That's the major level. If that breaks, see that big gap down there? Yeah, you can bet money we're going to be filling that gap. So you got to hold the 2024 high right there. Now, looking over here, you can see if we get the bounce, we hold right here, and then we fill this gap already, so then we should move up into this daily fair value gap of liquidity and start having reactions off of that and trying to grind through it. If it starts shooting, I mean, I don't know what he's going to say, but let's say he says something, the market goes absolutely nuts, woo, right? Volume calls start rushing in, and you see this thing start just flying through that fair value gap right there with no reactions, then that's going to set up for a big move. You know, and like I said yesterday, and a lot of people never like hearing that stuff, but I said, are we due for a pullback? Yeah, I mean, we're getting a little pullback today. Are we due for more? Yeah, I mean, sure, absolutely. And this actually formation right here, whether you want to call it a rising wedge, whatever you want to call it, usually breaks down, right? It can go for a while, though, but you can see each time, especially when it comes out of WM, usually you do get, 3 to 5% pullback when this thing breaks down, right? And so that's normally how this works, is that trend line breaks and boom. It's like opening up the dam, right? Everything starts to flow down. So, I just want you to make you aware of that. Now, Nvidia, we'll talk about Tesla in the same way. We said it was riding this trend line. If it comes down, look for that daily fair value gap right there. I thought maybe it'd come down a little farther. I was looking between overall 120, 123. We'll take out all that liquidity. Also give us our shaded area, some support right there. But we decided to take out this daily fair value gap. A low of like 124. Low of 123.05 right there. So again, we got in there, but again, we've broken this trend line, so we'll see, because as you can see, it rocketed up. And keep in mind, it's a $3 trillion stock, or $3 trillion market cap stock. There's only a few of them out there, right? And it reports next week. And so you got Jackson Hole, and then the biggest thing is going to be Nvidia, but it is holding this support area right here, right now. Again, not on a trend line, but on a support area. They're holding this. Remember, it's all about the drama, right? It's all about the soap opera. Ooh, got to keep the cliffhanger going. So that's what they're doing right here. And I guess I'm about to create another shaded area. If it holds that right there, I'll create another shaded area for you. Gray box or whatever color the other boxes are, because it held that support. Now, if you look at Tesla, again, it was sitting on that trend line, broke down today. And it came down to what? The other trend line, which is kind of just right beneath. But again, thought maybe we get a reaction, which you got plenty of reactions in this daily fair value gap. But this one just grinded down into what? This next shaded area, which held, again, so far. But this is the one that goes pretty far back when you look at it, as far as being resistance and support. Okay. Now, again, I'll move out a little bit, so that actually on a shorter time frame, you can see we're sitting right on that trend line as well. So many trend lines, many support lines. That's where we ended the day. I always love how that works. And if it breaks that trend line, obviously that fair value gap and that gap down there to 200 is in play for sure. And when you look, that shaded area goes all the way back to May of 2022. Okay, you can see there's been support resistance, an area of interest for over 2 years now. I guess that'd be like, what, 2 years, 3 months? And so if we can hold that trend line, obviously bounce back up, get back above there. And, I had somebody ask me yesterday, said, why do you say a lot of people are talking about like 235 as being the level of interest? And again, if this breaks down right there, 201.25 will fill that gap. But there's plenty of liquidity to be had beneath this right here, just FYI. The reason why, you look at the volume profile, you can see when it broke up, if you follow it all the way up, it's like 230, 450 to 235. It really don't have any resistance, right? When you look at this, it's because of the way it's moved in that area, crashes, meteoric rises, that kind of stuff. That's why a lot of people are picking 235 before you run into a boatload of resistance. Just FYI. Now, Snow, whoo boy, got crushed on earnings, which we're going to talk about, because this is what you need to be looking for when it comes to Nvidia. Again, a rising wedge is never good to go into earnings with. Because when you look at these earnings, you would have thought, man, it was down 10% yesterday in after hours. With the sell-off today, it's down 15%. Back in what? Back in this little shaded area right here, which has been support so far, pretty good support, where everybody seems to come in. This one goes back to like May or June of 2022 right there. You can see buyers have stepped in. We'll see if they do it again. But what I'm talking about with these earnings is, I'm going to scroll down here for my morning news brief. We put a brief synopsis here, and we're going to go ahead and maximize this so we can actually see it. But these weren't terrible earnings. You would have thought these were just horrific earnings, right? But they had a double beat. They actually slightly raised their forward guidance, did not downgrade guidance or anything. You can read all these numbers for yourself. Again, and it was the most stellar quarter I'd want to put in for anybody. No, but you would think, being down 15% in one day for any stock, that they had a double miss, and that they didn't raise forward guidance or decrease forward guidance. And this is what I'm talking about when it comes to Nvidia. Nvidia has hung the moon on its last, what, 4 reports, I believe, if I'm not mistaken, maybe 5. But they've come in way over. I think they've raised guys like every time. And so you got to think to yourself, man, I mean, this thing has been moving up like crazy and is just beating, and then meeting expectations is going to be enough for it to go up. I want to know in the comments, what do you think? Because it's all just a guess. I mean, we all know it's just a guess. We don't know what Wall Street wants to do or not. But, you know, when you see something like this, you've seen other reactions, right, on certain stocks. And so you're thinking, you know, if Nvidia don't hang the moon, are they going to continue to go up? Or you think if they just come in as is and even do a double B, which I think we all expect, are they going to end up taking a tumble? That's really, you know, back down into the 90s, maybe low 100s. That's the question I have for you. So please put in the bottom what you think. But that's the kind of stuff you got to look at when you see a stock like this just hit the dirt on what was not bad earnings or anything. And just for disclosure, I do not own this stock or anything. Now, again, Friday, 10 a.m., there goes Powell speaking. You got new home sales. And then Jackson Hole Symposium basically takes place all day long, even goes into the weekend and stuff. And so, you know, I don't think anybody's expecting this guy to be hawkish. It's really not, because especially the job market, obviously, you know it's definitely softening. He knows it's softening. You saw the minutes I put in here from the FOMC members yesterday for you guys, what they said in July. So you know they got to be thinking that for sure. And a lot of people wanted to cut in July and already been talking about September. But then you also have the fact that we know inflation, with the numbers they give us, right, is below 3. And so that's really the big question. Obviously, we'll get more inflation data before they even do the September meeting and stuff like that. But this is what, guys, you know, everybody's looking for, right? And is it interest rates driving the market? Is it, you know, recessionary type stuff driving the market? Well, the recessionary fears kind of got put to the side. So now the job focus is kind of back in play or whatever, and all about the rate cuts and everything else. So again, let me know what you think down the bottom. And I kind of wanted to leave you with this right here, with a piece of advice from Peter Lynch, who is one of the greatest hedge fund managers of all time. And this kind of made me laugh, but it's so true. And let me know if you've ever done this yourself.
Somebody buys a stock at 10 and it falls to 6. They say, if it gets back to 10, I'll sell. Now, I think the math, 4 and 6, I can handle this level math. I think that's about a 66% return. You ought to buy it. If you think it's going back to 10, you ought to buy the hell out of the damn thing. But they think if it gets back to 10, I'll sell. But just saying the stock, if it gets back what I paid for it, is a very important rule. This is one of the key rules. The stock doesn't know you own it.
And yes, in my life, I have been guilty of that myself. It is a funny thing. And so I just want to at least put that in there for you. So anyway, please hit that like, subscribe button on your way out. Feel free to sign up for the membership. It's everything you get in and stuff. Just hit the link down at the bottom. And I will see you guys Saturday. So feel free to put your questions in the bottom for Saturday's video, all right? Have a good one, guys.